I'm Debi Peverill, and you're listening to the weekly tip from Painless Financial Training Group. Today I'm talking about short-term rentals. Again, a couple of weeks ago I was talking about this too. Today what I'm talking about is a change to the T776 form, which you use to report your income from short-term rentals if you earn that money personally. So short-term rentals, we typically just call that Airbnb, but there are other platforms like Vrbo, and maybe you're doing short-term rental but you're not doing it through Airbnb. The short-term rentals are under attack, typically right across the country by various municipalities that have restricted the ability for people to do things like Airbnb. And CRA has stepped up to the plate. What they have done is tell us that if you are filing a tax return for a short-term rental income and that short-term rental is taking place in an area where they're not allowed to be doing short-term rentals, then the income is taxable, the revenue is taxable. So the amount that the customer actually paid to do the rent is going to be included on your income, but none of the expenses are going to be included. You're not going to be allowed to deduct insurance or utilities, repairs and maintenance, any of that stuff. You just pay tax on the revenue. So the way they're doing that is the form, the T776, now has two columns, one for long-term rentals and one for short-term rentals in the expense section, and you have to adhere to that. You have to file that in the right column, and the reason they're doing that is because they can tell from postal codes whether you're allowed to be doing what you're doing or not, and they're going to be able to just immediately disallow any of the expenses that are in the short-term rental column if it turns out you're not allowed to be doing that. So you might want to consider whether you have a permit to do what you're doing. If you are in fact legitimately allowed to be operating a short-term rental business in the area you're operating it in, then you should be allowed to have your deduction, and hopefully it's all going to work out. But CRA is making it easier for themselves this year by asking you to separate the expenses in a way that allow them to disallow the whole of the expenses if it turns out you're not allowed to be operating that short-term rental.